HDFC Nifty500 MultiCap 50:25:25 Index Fund NFO. Will investing in this NFO help in your wealth accumulation process in the long term or not? Let us find out through an in-depth analysis in this video. Hi. Welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. So before analyzing whether this will be a good fit for us or not, let us first understand what is HDFC Nifty500 MultiCap NFO and some basic details about it. So, the NFO, it opens on 6th August 2024 and is open until 20th August 2024. And some of its key features are, it is an open-ended fund type which has Nifty500 MultiCap 50:25:25 ratio TRI as its benchmark index, and it belongs to the category of equity multi-cap fund. And the fund managers for this NFO are Mr. Nirman S. Morakhia and Mr. Arun Agarwal. And the minimum application amount you need to start investing in this fund is just 100 rupees, and the riskometer involved in this NFO is also very high. So this is the key features of this NFO. And the investment objective, the primary investment objective of this NFO is to provide returns to the investors that before expenses closely correspond to the total returns of the securities as represented by the underlying index, subject to tracking error. So as we have understood a few basic details about the NFO, now let us look a little bit more into the Nifty500 MultiCap index. So this index aims to measure the performance of your portfolio of large, mid and small market capitalization companies with target weights assigned to each size segment. So Nifty 50:25:25 index includes all companies that are part of the Nifty500 index, and within this index the total weight of each size segment like large, mid and small cap is based on the total free float market capitalization of all stocks falling within that size segment. And in this index the total weight to each of these segments is fixed at 50%, 25% and 25% respectively at every quarterly rebalance date. So this index can be used for a variety of purposes such as benchmarking, creation of index funds, ETFs and other structured products. And the sector represented under this index are financial services, capital goods, information technology, automobile and auto components, oil, gas and consumable fuels, healthcare, fast-moving consumer goods, consumer durables, consumer services, metals and mining, chemicals, power, construction, telecommunications, services, realty, construction materials, textiles, media, entertainment and publication, diversified and forest materials. And the top weightage is given to the financial services sector by a weightage of 26%, and the least weightage is given to the forest material sectors with a weightage of 0.23%. And the stock's top 10 holdings stock represented under this index are HDFC Bank Limited, Reliance Industries Limited, ICICI Bank Limited, Infosys Limited, Larsen & Toubro Limited, Tata Consultancy Services Limited, ITC Limited, Bharti Airtel Limited, Axis Bank Limited and State Bank of India. So out of these, the number one top holding in this is HDFC Bank Limited with a weightage of 4.79%, and the 10th holding is the State Bank of India with a weightage of 1.23%. And now if you look at the index returns as on June 28, 2024, from the graph we can see that in a year it has given a return of 45.81%, and in 5 years it has given a 22.89%, and since inception it has given a return of 16.93%. So in long term it has given us good growth with minimal volatility. So this might be suitable for a long term investment according to the returns we can see in the screen. Now we are going to analyze whether this NFO will be a good fit for an investment portfolio or not by clearly analyzing and going through the pros and cons of investing in an NFO like this. So first of all, let's take a look at the pros, which is, as we can see from the returns, that this invest in a diversified portfolio that are likely to deliver you with long-term growth with minimal volatility. And also, as it is a multi-cap NFO, it invests across various sectors and market capitalizations. And if you compare it with a actively managed fund, the returns from this fund as an index fund is relatively stable with less volatility. And also, if you're someone who's not willing to take any kind of risk but still you want to add equity investments to your core in equity portfolio, then you can definitely invest in an NFO like this, because it will be suitable for an ultra conservative investor like you who's looking to add passive investments to the core equity portfolio. And as an index fund, this fund is also free from fund manager bias as it is managed passively. It is also also expected to have lower expense ratio if you compare it with the actively managed mutual fund schemes. So these are some of the pros of investing in an NFO like this. Now if you take a look at the cons, you can see that as an NFO and as an equity fund, it predominantly invests in equity. So it might not be suitable for a short-term investment, because generally when you invest in equity, the suggestion given to you or the most recommended suggestion is in equity it's better if you invest for a long-term period rather than for a short-term period. It's because in a short-term period market is highly unpredictable, unlike in short-term period, for example, if you invest in it for more than 7 to 10 years, then market cycle would also get completed and you will be able to see a little bit stability in returns. But in short term, the market cycle would get really highly unpredictable, where it will go through a period of no returns, negative returns, even a period of where you will get very low returns. It's better if you do not invest in it for a short term investment. So if you are a short term investor who wants to achieve their short term financial goals, it's better if you do not invest in an NFO like this. And also, as an index fund, this may underperform its index due to certain factors. Just because it tries to replicate the index perfectly doesn't mean it will not underperform. Due to certain factors, it will also underperform. And as an index fund, the best it can do is try to perfectly match the returns the index tries to give. It will not try to beat the index itself, because it will only try to replicate the index, right? So it will not be able to deliver you with market beating returns. And also, as it only tries to replicate the index, so based on the market outlook, it will not change its fund allocation dynamically. It will only try to do how the index is performing. So as an index fund, it will also, if you take a look at it, they will only look at the overall performance of the index rather than the individual analysis of the each underlying stocks, and check what kind of soundness of the company in which they are going to invest. If you take a look at the active funds in comparison to this, they take calculated risk by analyzing all stocks and choosing the best individually. But here they will only look at the soundness of the overall index, how the index performs. They will not look deeper into each individual stock. So that's also something. And the major drawback, if you consider the major drawback of investing in an index fund like this, is the tracking error, because it may not perfectly track its index. So you may not get the returns as index itself has given. So that's also a major drawback. So as an index fund, as it will not flexible in its allocation according to how the market is performing, it will also not be flexible when the market crashes. So you will not be able to take any course corrective measures also to save it. So it will only try to follow what the index is doing. So it's only try to replicate what the index is performing. So these are some of the cons investing in this NFO. So these are the potential risks you might be undertaking in investing in this also. So you need to carefully consider before choosing to invest in this. So what is the final takeaway of investing in the HDFC Nifty500 MultiCap 50:25:25 index fund NFO? Should we invest in it or not? From our analysis, we can see that this will be really suitable for an ultra conservative investor who's not willing to invest in an actively managed funds which have a high risk compared to this. But our suggestion is, if you still want to invest in an index fund, it's better if you invest in similar existing index funds out there in the market that have a lower expense ratio and lower tracking error compared to this NFO. And if you're willing to take a little bit more risk, you can even invest in actively managed funds which have the potential to deliver higher returns than an index fund like this. So if as an investor, if you're expecting dynamic fund management and looking for investments that can beat the market itself, then you should definitely avoid an index fund NFO like this, because you will not be able to allocate the fund allocation dynamically, and also the best it can do is replicate the index. It will not try to beat the index itself, as we have previously mentioned in our analysis. So if you're still wondering whether this will be a good fit for you or not, it basically boils down to what kind of an investor you are, what kind of risk you want to take, or what kind of allocation you want to give to this fund to achieve your financial goals. But if you are thinking you do not have the sufficient knowledge or the time to research to make a proper allocation to these funds, or which kind of fund you want to invest in, you can definitely consult with a professional like a certified financial planner who will be able to look at all angles and see whether this will be a good investment fit for your investment portfolio or not. They will be able to look at your risk profile and what kind of time horizon you want to invest, and what kind of allocation will be better suited for your investment portfolio, and what is the overlap ratio between your investment portfolio and the investment portfolio you want to invest in. They will look at all possible angles and see which investment option will be suitable for you, and how much allocation or how much time you need to spend in it, and customize the investment plan for you or a financial plan for you to have a better financial future. So they will try to make your investment journey more hassle free and smooth for you, and make it more achievable and in a more fast and smarter way to achieve your financial goals. So involving a professional will definitely make it easy for your investment journey. So you can definitely consider investing going down this route also.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insight through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.